Hey guys, so in this video, we're going to discuss accounting for vehicle lease versus vehicle finance. Now, before we get to the actual accounting part, I have a favor to ask. Well, if you're watching my videos and they are helping you, please do hit subscribe. As more subscribers I get, more motivation I get to produce more content for free. So please do hit subscribe. And if you have a suggestion for any video, please do comment. And I'll try my best to make a video on that. So that's it. So let's get started with accounting for vehicle lease versus vehicle purchase. Okay, so we're gonna start with vehicle slash auto lease, which is the easier one. Only account that you need to create for this accounting for vehicle lease is auto lease account or vehicle lease account. Any down payment you make towards this leased vehicle or the monthly payments that you make, all are going to go into the same account, vehicle lease account or auto lease account. So let's create that account first and let's see how to record the payments against this account. So we go to chart of accounts, click on new. I'll create an expense account called auto expense. It's going to be expenses type account, auto. Now, first I'm creating the main parent account, and then I'm going to create a sub account called auto lease. So lease, it's going to be detail account is going to be the same. I'm going to make it a sub account of auto expense because this is the header we use. This is the parent account we use for the other type of auto related expenses too, like gas, like parking and tolls, or service. Any kind of repairs or anything to auto. Okay, so we're done creating this account. Save and close. Just save. Okay. Now, if I need to record my monthly lease payments, I can go to bank transactions. Here I have the other window here. And assuming this is my monthly payment, I'm going to pick the right date. Let's say it's Ford. I'm going to add a new vendor. Okay. So Ford is, now I have an account called Auto Lease. So I'm going to record it just like this. And if there was a down payment made towards this vehicle, then same thing, Ford and Auto Lease. You'll pick the name of the car vendor, and then you'll pick this expense called Auto Lease. Okay, so I'm going to add it. Okay, so the Auto Lease expense has been recorded now. Now let's see how it's going to show up on our P&L. I'm going to make another duplicate of this. This saves me time. Okay, I'm going to go to reports. And look at my P&L report. Okay, this expense was on 5/30. I'm just going to pull a P&L for that date only. Okay, here auto lease is $225. That's how you would record an auto lease / vehicle lease expense. Okay, let's move on to the purchase part now, which is a little more tricky and requires more accounts to be created. Okay, let's see. First, we need to make sure, so let's go to chart of account. First, we need to make sure that we have an interest expense, right? Anytime you buy a car or truck and you finance it, most probably you're going to have an interest expense unless you got this super cool deal of like 0% interest rate. Anyway, okay, so since you need to pay interest, we need to make sure that the interest expense account is in QuickBooks already. Now, some people like tracking interest on cars like separately. So they might create another account called vehicle interest. That's fine too. You could do that if you want to. I'm going to track it in the same account, so I'm not creating another one. Okay, we have plenty of accounts to create anyway. Now, first one is going to be, now that you are buying a vehicle on finance, you're going to have a loan account, right? So we're going to create a loan account. We're going to call it auto loan. Okay, we're going to select account. Now I'm going to call it long-term liabilities. If you want to go in more details, you can have two of these. You can have auto loan current and auto loan long-term. So any portion of the auto loan that's due within the next 12 months, you'll put it in the current portion, and any portion that's due later than 12 months, you'll keep it in long-term. I'm not going into that much detail. I'm just going to keep it as long-term liabilities, and detail type is going to be other long-term liabilities. Okay, that's it. I'm going to save it. Okay. So my loan account is created. Now that I'm buying an auto, I need to create asset two. So I'm going to say new auto, and it's a fixed asset, vehicles. Okay, so that's the main account. I'm going to create more accounts here. Under this, I'm going to have auto original cost. It's going to be a sub account of auto fixed asset. I'm going to create another one, accumulated depreciation, which is going to be again a sub account of auto expense. Okay. And I'm done creating my accounts now. Now let's move on to the actual accounting. So let's say you are purchasing a vehicle that's you're purchasing a truck that's $50,000 plus 2,500 in taxes and fees, and you're paying 12,500 upfront for this truck. How would you record this? So depending on how you paid for that truck, you'll click on new and then expense or check. So let's say we paid via check. I'm gonna click on check. Okay, so the check, and who did we pay? Let's keep the same example forward. Okay, today, check number whatever. Okay, what are we buying here? We are buying a truck here. So we're gonna say original cost was $50,000, and taxes and fees, I am also adding it to the cost of the truck, 2,500. Then we got a loan on this, auto loan, for $40,000. Okay, now 12,500 is what you actually paid at this time. So my check was actually 12,500, and it was made up of original cost was 50,000, 2,500 was taxes and fees, and auto loan was $40,000. Okay, I'm gonna save and close it. So this takes care of recording the asset purchase, the truck purchase, the loan, and the down payment. Okay, now how do we handle the monthly payments that we make towards this? Now, the monthly payments that we make towards it, it's made up of two things. One, principal, the other one, interest that we pay on this. How do we break it down into principal and interest? We're going to go to that actual payment and break it down. Okay, let's assume this is the payment that we're making on the truck every month. Okay, I'm going to go here. I'm going to say it's Ford. Okay, how do I know how much is principal versus interest? Multiple ways of knowing that. One, you can look at your statement that will show you the breakdown. Two, you can go in the financing bank's portal and see there should be a schedule showing you how much is going to be interest versus principal. Or when you finance it, some banks actually might give you the schedule up front, like the amortization schedule up front. That would tell you how much is principal versus interest. Or you can just go online, download a free amortization schedule, and enter all the details about the vehicle purchase, and that should create a schedule for you, and that would tell you how much is principal versus interest. Okay, so once you know the amounts, then you would come back to QuickBooks. You would click here on this transaction, click on split, and you would say vehicle loan, right? Auto loan, sorry. You would say auto loan is $100. Let's say the principal is going down, the loan is going down by $100, and interest is $66.84. Okay, that's what you're going to do. You're going to click on apply and accept, and that's how you would record the monthly loan payment for your truck. Now let's look at the report. How do the reports look? Remember how in P&L the auto lease shows up? Okay, when we finance a car or truck, only thing in P&L we're going to see is interest expense, which is right here, 6684. Okay, and rest of it you're going to see in balance sheet, which is right here. See, this is where the purchase shows up, 50,000 plus 2,500, and this is where the loan is, 39,900. Why is it 39,900? Because we paid 12,500 upfront as a down payment, and then we had $40,000 loan, and then we paid $100, and then we paid $100 towards the principal when we paid a check. Okay, the dates are reversed, but you get the point. So that's how you would record the purchase. Okay, and if you have any questions, any suggestions, any comments, please do let me know. And that's how you would record vehicle lease versus the finance. Now, one more thing to pay attention to. If you're using the same vehicle for business and personal, do speak to your tax accountant about taking partial deduction for this. And at the end of the year, do make an adjusting entry to allocate the expenses between personal and business. And that's it. Happy accounting.